The goal of a successful trader is to make the best trades. Money is secondary. Hey everyone, welcome back to Your Nifty Guy. In today's video, we'll decode what Nifty did, identify key support and resistance zones, and lay out a clear trade plan for Monday. If this video helps you in any way, don't forget to like, subscribe, and leave a comment. I'd love to hear your thoughts. So let's get straight to the charts. First, we'll start with what we had discussed for Friday versus what actually happened in the markets. How did we play it out? And then second, we'll plan the trade for Monday, right? So markets opened with a gap down. It opened directly below the levels below which we were short. All we needed was a pullback. And if you can see, this is the good, beautiful pullback which came in right at the start of the day. I entered the trades around this time in this particular candle when this low had broken down. So this is the pullback that we got. And I was prepared to short the market in case the price moves below this particular moment, below this particular level. And I'll just zoom into the charts. So this is where I went short on Nifty. And if you, I'll just focus on one more point, which is this particular price action around here. Now, like I always tell you guys to try and speak to the market to try and understand what is exactly happening behind the scenes. Markets open with a gap down. You already know the markets are weak, but you cannot definitely immediately short. If you would have directly shorted around here, your SLs would have been hit. Then you waited for this pullback. Now, before the low of the day was broken, market went into sideways zone for 1, 2, 3, 4, almost 5 candles. So 25 minutes market spent in a sideways zone. And in this sideways zone, if you can see these wicks which are coming in from top, right? This shows that, okay, price is trying to go up, but it's facing rejection right from here. Plus, in case if market would not have created this particular price action around here, what this also helps you is have a smaller stop loss. So when you are entering a short around here, you can put your stop loss just way above this particular swing high with a little buffer. If this price action would not have happened around here, your SL, the most logical SL would have been above this particular swing high, which is a big SL, right? And so this is the key price action, which even gives you, okay, much more confidence in your trades, wherein you can get an entry with a very small stop loss. In case if the market decides to go against you, you will be taking a very small stop loss, and that is what we want. So this is something which you guys should focus on. And what I always tell you guys is about when the market is trying to break out or break down from any level, or you're planning a trade, at whatever level you're planning a trade, try to look and understand where the market is coming from. Say, for example, market actually did come here, it did not form this price action, immediately broke this low. Market has already would have traveled a good amount of price points, and immediately shorting it would have been a bit riskier. But market going into a sideways zone and then breaking down the level is much more, this is a much more high probable trade setups, which definitely is there. So whenever market breaks down of a level and before breaking down or before breaking out, it consolidates like this for some time. It makes the trade much more uh, probable and makes the risk reward ratio a lot better. Once in this trade, the initial SL was around here. I got out on this particular 1040 green candle closing. The logic, as usual, is always there. Around this low, I spotted an open-ended divergence. If you see, the markets made a new low, but RSI made a new high. But this was just an open-ended divergence. In case if markets would have fallen like anything from here, this divergence would have gone. So this is what is an open-ended but a not confirmed divergence. But as I tell you guys, when I take a trade, when I'm in a trade, I also trail candle by candle. So this candle actually fulfilled all the conditions. The high was higher, the low was higher than previous low, the high was higher than previous high, and we got a closing above the previous high as well, right? So these are simple trailing tools that I use. When I'm in a short trade, I need on a 5 minutes time frame, I'll need a candle which is the low is higher than previous candle's low, the high is higher than previous candle's high, and we get a closing above the previous candle's high. And when we say, for example, the reverse of this, once we are in a long trade, how do I trail? I want the candles to be like this. I'll just quickly draw. I'm not drawing any wicks just for, so whenever I'm in a long trade and I will be exiting my trade if I see something like this on the chart wherein the high is lower than the prior high, the low is lower than the prior low, and we get a closing below this particular low, which is the last candle's low. We need to close below it. So this is my simple trailing system that I use while I am taking these trades. Post this trade, there were nothing major happening in the market. Weird price action, markets forming kind of double bottom with RSI positive divergence immediately again, not giving any good trades, going into sideways zone. And this price action was extremely weird. Market gave a good breakdown below the day's low, gave a closing as well, immediately reversed. Right. So I did not, because the price action wasn't clear around here. This is why I avoided trading in this particular zone. If you can see, uh, I'll quickly just draw the, for anybody who is not able to understand the price action, you can use this tool as well. I hope you get the idea. It was very weird price action with no clear market structure, and that is why I decided to not trade around any of these price points. Plus, there was nothing as per my setup as well, right? So that was the reason. This was the only simple trade backed by logic, backed by price action confirmations, and backed by the plan that we had in the markets, right? I have always been telling you guys that this is a level below which we are automatically short. So this is a confluence trading wherein not just price action on a smaller time frame, but the higher time frame levels are being broken. And as you can see, prices consolidate around these levels. And once we entered, we were already below this level. So this is the simple sweet how planning your trade helps you in a long way. Now, if we are to look for the trade plan for Monday. First of all, we'll be deleting all these things. Now, this particular fib zone has done its job uh, because the low is already broken. We, till the time we were above this particular fib, we would have kept this on our charts. But now, because this low is already broken, we don't need this anymore. What is this simple red box? Okay, this is the fib zone for upside resistance. We don't need this as well. On a weekly time frame, yes, Nifty is looking kind of weak. So this was the breakout, which actually ultimately failed. And you can see, we can see 4 weeks of negative price action being formed on Nifty. Now, usually what would happen is I don't think the trend, I don't want the, or I don't, it is not market will do anything that I want, but I don't expect the market to continue the falling straight away. It can go a little sideways. Similarly, just like this, when the market had risen like this for a couple of weeks, it went into a sideways price action consolidation. Now it has been falling since a couple of weeks. I don't think it can continue the fall. It obviously can, but I believe it will go into a sideways consolidation for some time. But as I said, we will not be predicting. We will be planning our trades, and that is what we are good at. Okay, perfect. Very price action wise on a daily and on everything on a weekly time frame, the price action is very clear. I'm just doing the quick analysis and then we'll create the plan. On a 75 minutes time frame as well, we still have a positive divergence. The markets have created a new low, whereas if we compare the RSI levels around these levels to this level, it is still an open-ended divergence. If we go down further on a 75 minute time frame, the divergence will be gone. So it's still an open-ended divergence, but nonetheless, there is a positive divergence. So we'll be keeping an eye on it. On a 15 minutes time frame is where we plan all our trades. My plan of action will be very simple. I will be short below this. FIIs, by the way, have been net sellers since the last many days, and that is a cause of worry as well. So what they had actually done is the buying that they did in the last couple of months has already been negated by selling in just the July month itself, right? So FIS were net buyer for the last couple of months, but in July they have sold more than what they had bought in the last couple of months combined. So I believe the price action point wise also, as the price is also reflecting the same thing, the biasness towards trades on Nifty will be a bit negative. Okay, so this is what we'll use the fib levels for, and I'll only be marking the 0.5 to 0.618 zone around here. Okay, market opens with a market opens flat, minor gap down, gap up. We are looking to create a short entry below this particular level. Once again, the simple trade that I always tell you guys of trapping on the bottom side can also play out. Keep an eye because the market was trending and gave a closing near the day's low. In case if we get a flattish gap up, minor gap down candle opening, we get a negative candle which closes below this, and then the high of the candle gets taken out, we can create a trade on the long side around here. Mind it, this trade can only be traded at the start of the day. In case if a price action like this develops around the start of the day, fulfilling all the conditions, we need a negative candle. By negative, I just don't mean the red candle. I mean a candle which shows that people have actually gone short on that candle, be it a bearish Marubozu candle, be it a hanging man, be it an inverted hammer, whatever you call it, name the candle anything, but it should be negative, right? So if that happens, we are, and then the high gets taken out, right? All the conditions needs to be fulfilled. We need a closing below previous day's low, and then we need the high to be taken out. And if all these conditions are met and we get a price action which follows this, we will be taking a long position right around here with a very small stop loss of the day's low. And our first targets will be around these, not the first targets, but around these levels is what I will be looking to book the trades. And since the overall sentiment right now is negative, in case if this trade happens, I will be trading this in very small, very small quantity, and I will be trailing it very tightly. And needless to say, around this level, we will look for negative price action to go short on the markets again. And above this is what the only place where I will be looking at creating a long entry, nothing before that. So the plan of action is very simple, but again, I expect the markets to to remain a little bit on the sideways side. So minded this particular zone, apart from this particular trade, this should be a no trading zone. So let the market commit to you before you commit to the market. Let's see what how the market plays it out on Monday. We are prepared for any and all the scenarios, and I hope you guys will take do the homework and try to read and study as many charts as possible over the weekend. And that is how you actually gain out the knowledge of reading the price in the live markets, right? So yeah, that's it from my side for the trade analysis of for Monday. And this is your Nifty guy signing off for today. I will see you guys again on Monday post the markets. Have a good weekend and stay safe, trade safe in these markets. All right, then. I'll see you guys. Thanks for tuning in. Cheers.